Okay. Right, welcome back from the short break after finishing question 3. So now we are proceeding with question 4 from the very same paper, which is November 2020 in bracket 2. We are now doing the last question of paper 2, which is question 4, which is based on stock valuation. Stock valuation. I hope you still remember that we have about 3 stock valuation methods. There is weighted average method, there is a FIFO method, and there is also specific identification. And we also have 2 stock control systems. The 2 stock control system is the perpetual system and the periodic system. And the main differences between the 2 systems is that the perpetual stock system, cost of sales is calculated at the point of sale, but in the periodic stock system, cost of sales is calculated after a certain period of time. And these 2 stock control systems have got their advantages and disadvantages. So, but our main focus for now is on question 4, which is based on the stock valuation. And 4.1, it says give one word for each of the following statements. Write only the word next to the question numbers 4.1.1 to 4.1.4 in the answer book. This is stock valuation. Right, 4.1.1, 4.1.2, 4.1.3, 4.1.4. Right, the first one, it says, the method is most suitable for inexpensive goods purchased regularly. Which method is that one? The answer to that, it is the weighted average. Weighted average is more appropriate for the business that is selling inexpensive goods. So weighted average method is the most appropriate for the business which is selling inexpensive goods and which are purchased regularly. 4.1.2, the closing stock balance is recorded at the most recent price paid. That is first in, first out. Closing stock balance is recorded at the most recent prices paid. We are looking at FIFO. FIFO, which is first in, first out. 4.1.3, the individual stock items are valued at the cost price on the purchase invoice. Individual stock items, we are looking at, we are targeting individual stock items. That is specific identification. So the answer to this one is specific identification. Specific identification. Right? The cost of sales is recorded for every sales transaction. Cost of sales is recorded for every sales transaction. We are looking at the perpetual system. Perpetual system. And this is 4 marks. So you should be able to know. Please make sure that you go through this and you are very much clear about differences of these stock valuation methods and also the stock control system. So that was 4.1, wherein the method suitable for inexpensive goods is the weighted average. The closing stock balance is recorded in the most recent prices, that is first in, first out. Individual stock items are valued at cost price on the purchase invoice, that is specific identification, and the cost of sale is recorded for every sales transaction. You're looking at the perpetual stock system. And now it's 4.2. 4.2. 4.2 Lotus accessories. Lotus accessories. Lotus accessories. Right. The owner is Alex Lotus. The business uses the first in, first out method to value gas lamps. They decided to sell gas stoves as well, expecting a demand due to increased load shedding. The specific identification method is used to value this stove. The financial year end is 30 April each year. 4.2.1 calculates the following for the gas lamps on 30 April 2021. Value of the closing stock using FIFO. 4.2.1. 4.2.1 value of the closing stock. Value of the closing stock. That's for gas lamps using FIFO. For gas lamps, we want to calculate the value of the closing stock for gas lamps. If you look at page 13, information A, you have the stock balance on 30 April 2021, which is 270. The stock balance, we are having 270 in the closing stock. 270 gas lamps in the closing stock. Because we are selling according to the FIFO method, when you are calculating the value of the closing stock, you need to start from the bottom up. Because when you are selling according to the FIFO, is first in, first out. So therefore, the older stock is sold first. So whatever that may be left will be left towards the end there. So we will start the last stock that we bought was in March. The last stock that we bought, which should all be there. And the total number of units in March stock was 220, and we returned 40. So 220 minus 40 equals to 180. So we are left with 180 here, and the unit cost is, for March, is 80 Rand. So we have 180 multiplied by 80 rands equals to. And then we need to go a little bit up because we want to make a total of 270 in the closing stock. We want to go a little bit up to January. We are going a little bit up to January. And how many we should take there? There is 1,100, but we need to make up 270. We already have 180. So it means we need to take only 90 here. 90. And the unit cost? And the unit cost for January is 75 Rand. Unit cost is 75 Rand. Right. Let's have the total now, the value of the closing stock. 180 multiplied by 80. That's 14,400. 14,400. And then 90 multiplied by 75. 90 multiplied by 75 equals to 6,750. And then this is 14,400 plus 6,750. That's 21,150. 0, 5, 10, 11, 21,000. So the value of the closing stock is 21,150 according to the FIFO method. The total number of units in the closing stock is 270, and when we are calculating the value of the closing stock using FIFO method, you need to start from the bottom up. So the latest stock that we purchased was in March, which was 220, and we made returns of 80 or 40, so we are left with 180. Because there is a total of 270, we need to go a little bit up and take 90. So 180 plus 90 is giving us 270. And we are using the original cost prices of stock because this business is using FIFO method. So therefore the value of the closing stock is 21,150. That is B. We are still on 4.2.1 B now. Stock holding period in days using the closing stock. I want to calculate the stock holding period. The closing stock is 270 and the total sales for the whole year is 2,180. 2,180. The closing stock is 270 and the total sales is 2,180. We want to calculate how long will it take us to sell the 270. We are comparing it with our total sales for the year. So it will then be 270 over 2,180 multiplied by the number of days in a year. That's 365. So how long will it take, the stock holding period in days using the closing stock? So it will be 270 divided by 2,180 multiplied by 365. It will take us 45,2 days. There's 45 days. 45,2 days. So it will take us 45,2 days to sell the 270 gas lamps which are in the closing stock. Right, 4.2.2. 4.2.2. 4.2.2. Alex suspects that the stock of gas lamps are not well controlled. He suspects that the stock of gas lamps are not well controlled. Calculate the number of gas lamps missing. He suspects that the stock of gas lamps are not well controlled. Calculate the number of gas lamps missing. So it means we need to calculate everything that we are having. We were having 2,940 available for sale. The total. This 2,940 is made up of 230 opening stock plus 2,750 purchases minus 40 returns. So available for sale, we had gas lamps available for sale, which is 2,914 units. And we were able to sell 2,180. 2,140 minus 2,180. 2,940 minus 2,180. So we should be able to know how many we are left with. It is 2,940 minus 2,180 minus 2,940 minus 2,180. 2,940 minus 2,180. Available for sale was 2,940 and we sold 2,180. 2,940 minus 2,180. So we are supposed to be left with 760 equals to 760. We are supposed to be left with 760 gas lamps because we had 2,940 available for sale and we sold 2,180. We are supposed to be left with 760, but according to the closing stock, we are only left with 270. Minus 270, we are only left with 270, which is then telling us that there is an equals to, there is 490 gas lamps missing. $490 gas lamps missing. So this question saying that Alex suspects that the stock of gas lamps are not well, calculate the number of gas lamps missing, It's 490 that has gone missing. People are stealing the gas lamps. An investigation revealed that Alex's brother employed at the store, that is 4.2.3. 4.2.3. Investigation revealed that Alex's brother employed at the store orders gas lamps using the business ordering system and then sells them privately to his friends. What should Alex say to his brother when dealing with him with this matter? Provide 2 points. Alex's brother is employed at the store and orders gas lamps using the business ordering system and sells them privately to his friends. What should Alex say to his brother when dealing with this matter? Provide 2 points. This one is a clear stealing. So this is unethical. This is unethical. This is theft. And should stop doing it. This is what must be told to the brother. This is unethical, it's theft, and he should stop doing it. And point 2, reimburse Alex. Reimburse Alex the amount stolen. He should pay this money back. We are saying that he should reimburse Alex the amount stolen. This is unethical. So this is what Alex needs to tell his brother, that what you're doing is unethical, it is theft, and he should stop doing it. And if he has to continue working with his brother, then the brother needs to know that they need to pay this. He needs to pay this money back. So this must reimburse. There are so many ways we can use. We can even recover this money from his salary. Right. We are now proceeding to 4.2.4 now. 4.2.4. 4.2.4. 4.2.4. Calculate the closing stock value for gas stoves. It is now gas stoves, no longer gas lamps now. We are now dealing with gas stoves. All right. We want to calculate the value of the closing stock for gas stoves on 3rd April, and we are now using specific identification method. It is now specific identification method. Specific identification method. We want to use now the specific identification. Calculate the closing stock value for gas stove using the specific identification method. Right. Let's go to the gas stoves. The information of the gas stoves is on page 13, and it is information B. Stock records for gas stoves, purchases, and sales. We have 2 models there for gas stove. We have a B-light model. We have a B-light model. And if you look at the B-light, the purchases is 80 plus 80 plus 120. We have 80 plus 80 plus 120. 80 plus 80 plus 120 minus 132 sold. Minus 132 equals to. We want to calculate this. Minus 132. 80 plus 80 plus 120. These are the purchases. Minus 132 sold. 80 plus 80 plus 120 minus 132 sold. That's 148. Equals to 148 B lights. And the unit cost for B lights. Sisele nama B light 148. Satenga 80, we bought 80 plus 80 plus 120. And we sold 132. So we are now left with 148. Then the unit cost for B light is 495. 148 multiplied by 495 equals to 148 multiplied by 495 equals to 73,260. It's B light. And then the second model of gas stoves we are having is B Smart. It's smart. It's the smart model. And let's check. The smart, we had 100, purchase 100 plus 60. 100 plus 60, that's 100 plus 60, that's 160. The smart is 100 plus 60 minus 54 sold. Minus 54 equals to 160 minus 54. That's 106. Equals to 106. And the unit cost. The unit cost for smart, 100 plus 60, 160 minus 54 sold, and the unit cost is 700 for smart. 106 multiplied by 700 equals to 106 multiplied by 700 equals to 74,200. So the value now of the closing stock will be this 73,260 plus this 74,200. 74,200 plus 73,260. The value of the closing stock is 147,460. The specific identification method is the easiest method of valuing stock because you are specific to each product. You just go straight to information. You start with the B light. You purchase 80, another 80, and another 120. And you sold 132. So you are left with 148. And how much does each cost? It cost 495. So you are left with 148 at 495 each. So the value of the closing stock for 148 is 73,260. For the smart model, you purchase 100 plus 60, you sold 54, you are left with 106. And each smart model calls 700. So it's 106 multiplied by 700 equals to 74,200. So if you are adding the two amounts, you are getting 147,460, which is the value of the closing stock using the specific identification method. Right. 4.2.5. 4.2.5. 4.2.5. Calculate, Alex thinks he should stop selling gas stoves as they are causing a liquidity problem and the profit is low. Provide figures to support his opinion. Yeah, if you look at the closing stock, it's too high. Closing stock is too high. That's the first point. Closing stock value is too high at 147,460. This is an indication that the gas stoves are not selling fast. So closing stock is too high. So there is an indication that the gas stoves are not selling fast. fast. Provide figures to support it. Alex thinks he should stop selling gas stove as they are causing a liquidity problem and the profit is low. Yes, the value of the closing stock is 147,460. And if you look at the markup percentage achieved, for P-Lite is 60% and for Smart is 40%. And Smart is 40%. That's the markup achieved. So you can see that there's a little bit of a struggle with regards to the gas stoves. So he wants to stop selling the gas stove because you can see that they are not moving fast. Even if you see at the closing stock, if you look at the closing stock of 148 stoves that have not been sold, it's quite a lot. And even here, it's 106 that has not been sold. It's quite a lot. So that is why we are worried about the closing stock value being too high. So that is why that he thinks that he wants to stop selling gas stove. But we are also required to explain 2 points to convince him not to discontinue trading in gas stoves. 2 points to convince him not to discontinue trading in gas stoves. Maybe those 2 points will be gas stoves will be in demand due to load shedding. Gas stoves will be in demand due to load shedding. Gas stove will be in demand due to load shedding. We are now trying by all means to convince him, because this person now wants to stop selling gas stove. We are coming up with points that no, he should not give up on the gas stoves, because there is a high possibility that these gas stoves will be in demand in future due to load shedding. And we even know that gas is cheaper than electricity nowadays. Gas is cheaper than electricity. Previously, electricity used to be cheaper than gas, but with these all price increases in electricity, now gas has become cheaper than electricity. So we can convince him not to stop selling gas stove. Maybe he needs to reduce the selling price so that these gas stoves may be sold, or maybe he needs to consider advertising this more, because maybe some people are not aware that he is selling gas stoves. But as for discontinuing selling gas stove, we are saying it will not be a good idea, because when looking at this load shedding that we are experiencing currently, it is giving us an indication that the gas stoves will be in demand in the future. And gas is also even cheaper than electricity. This brings us to an end of our question 4. Question 4 was a little bit of a short question from 4.1 to 4.2.5. And this is not only bringing us to an end of question 4 only, it is then bringing us to an end of paper 2. Paper 2. Accounting students need to be very clear of the items or aspects which are tested in paper 2, and also aspects which are stated in paper 1. Paper 1 is mainly limited liability companies, and we started by dealing with paper 1 of this exam, which was in November 2020 in bracket 2, and we finished paper 1. So it was basically limited liability companies, wherein we were looking at the income statements, we are looking at the audit report, we are looking at the balance sheet, analysis and interpretation of financial statements, cash flow statement, and all those things, corporate governance. So that was paper 1. So what we are finishing now is paper 2. And if you quickly go back to this question, you will notice that question 1 was based on VAT and creditors reconciliation, which is part of our paper 2. VAT is very important for us to calculate. You should be able to calculate the amount excluding VAT and the amount including VAT, and you should be able to know how to calculate VAT when given the amount including or when given the amount excluding. There was also in question 1, which was creditors reconciliation. Creditors reconciliation is about ensuring that the balance that we are having according to our creditors ledger is the same as the balance that the statement as the suppliers will send us the statement. So we want to ensure that the balance according to our records is the same as the balance that is in the statement, that is reflected in the statement that has been received from the suppliers. So should there be any differences, of which in most cases there will be differences, so therefore reconciliation needs to take place so that we are able to correct that. So our question 2 in this paper was based on cost accounting, which is manufacturing. And we did emphasize that when we go to a manufacturing industry, you would expect that you have 3 departments, which is the administration department, the factory department, and the selling and distribution. And in most cases here in this one, we were tested on the production cost statement, and the production cost statement is basically in the factory department. So it's very important that when you are dealing with the transactions of the production cost statement, you are able to make sure that whatever expense that you include in your factory overheads is an expense that relates to the factory. If it is something else, then it should not be included in the production cost statement. There was also some calculations in 2.2 based on the break-even point. So a break-even point, you know, we are looking at the number of units that the business needs to produce in order to cover all its costs, the number of units that the business needs to produce and sell in order to cover all its costs. Break-even point is the point at which neither profit nor loss is made. And in most cases, when you have calculated break-even point, you need to compare it to the number of units produced. If the number of units produced is more than your break-even point, it will indicate that the business has made a profit. Our question 3 on this paper 2 that we have been doing was based on budgeting that we are doing today, and it is very important to be able to calculate the debtors collection schedule amounts. It is also very important to be able to compare the budgeted figures with the actual figures so that we are able to make the correct decisions informed by the actual figures compared to budgeted figures. And the last question was based on stock valuation. 3 methods of valuing stock, which is FIFO, weighted average, and specific identification. But unfortunately on this question, weighted average was not covered. It was only specific identification and FIFO method. So, but we want to believe that students will benefit a lot when they are doing this, when they are watching this video and also doing this question. We also encourage that people should be having the question papers when watching these videos so that they are able to follow. If you are having your question paper with you and also your calculator, so that whenever we are doing transactions on the board and doing calculations, you are able to see where is this coming from. So this brings us to an end of our accounting paper 2, November 2022. Thank you very much.